Pepe is back on the radar, and the big question is simple. What do credible forecasts actually say about where it could go next? According to StealthX's latest roundup of analyst models, the outlook ranges from cautious to wildly optimistic, depending on the time horizon and how much social momentum returns to meme coins. First, a quick refresher on what you're holding. StealthX notes that Pepe launched in April 2023 with a fixed meme supply of 420.69 trillion tokens and hit its all-time high near 28 100,000ths of a dollar in December 2024. Since then it has been volatile, with sharp drawdowns and equally sharp rebounds whenever the meme cycle heats up again. Let's talk near term. For 2025, StealthX aggregates three popular forecasters. Digital CoinPress is the conservative anchor, with a trading band roughly between 9 1/millionths and 20 to 1 millionths of a dollar. Telegaon sits in the middle, pointing to a range that tops out a little above 3 100,000ths. Price prediction is the outlier, sketching a scenario where Pepe jumps into the multi-thousandths range, which would be a new priced higher altogether. The message is not that one number is right, it is that the spread of outcomes is enormous and tied to sentiment. Looking out to 2026, StealthX says those same sources generally step the ranges higher. Digital CoinPress inches into the low to 100,000ths area. Telegaon's band extends toward the mid-5 100,000ths. Price prediction keeps the very bullish case alive, still talking about the low thousandths if mean liquidity returns in force. For a longer lens, 2030 is where the models really diverge. According to StealthX, Digital CoinPress puts Pepe in the high 5 100,000ths if adoption keeps grinding. Telegaon's band stretches into the high 100,000ths. Price prediction imagines a powerful meme cycle supertrend that prints levels around 1.5 cents. StealthX calls out even more speculative figures for 2040 and 2050 from some sites, up to dollar-level targets, but flags those as highly speculative and dependent on Pepe staying culturally dominant for many years. So what actually drives Pepe in the real world? StealthX is blunt about it. Utility is not the engine here. Attention is. When social energy spikes, exchange volumes surge, influencers pile in, and meme coins lead. When the spotlight moves on, prices bleed quickly. That is why you can see price cool off while watchlists, active addresses, and mentions are quietly building underneath, and then suddenly everything moves at once. If you want a practical checklist, start with participation. Does spot volume rise alongside price, or is it a thin drift? Do open interest and funding pick up in a healthy way, or are you seeing one-sided leverage? Next, watch the broader cycle. Meme coins tend to run hardest when Bitcoin consolidates after a rally and risk appetite shifts down the curve. Finally, respect levels that the crowd can see. If price reclaims prior high-volume areas and holds them on a retest, the path is clearer. If it fails there on rising supply, expect more chop. Risk management matters more here than almost anywhere else in crypto. StealthX emphasizes that Pepe's value is tethered to culture and sentiment. That can be thrilling on the way up and brutal on the way down. Decide your maximum allocation before you press buy. Plan exits before you enter. And remember that these forecasts are scenarios, not guarantees. Bottom line. According to StealthX's compilation, 2025 looks like a band from modest gains to big upside if a meme wave returns. 2026 pushes those ranges higher, and 2030 is where the spread explodes from incremental new highs to a much more ambitious tire. Whether Pepe reaches the upper ends of any of those paths will come down to one thing: attention. If the culture keeps talking about Pepe, price tends to follow. If it doesn't, models won't matter. You've been watching Cryptozard News. Please subscribe and like, and leave a comment if you enjoyed this video, and let me know what other crypto-related news you'd like to hear in the future. New month, rough open. Crypto started September in the red, with majors slipping and riskier sectors taking the biggest hit. According to Crypto News Live blog for September 1st, Bitcoin dipped under the 108K mark, Ethereum slid, and GameFi led losses after a whale-driven dump in one of the sector's tokens. Let's frame the day. A pullback at the start of the month isn't unusual. Funds rebalance, traders de-risk after a strong summer, and liquidity can be patchy around the Labor Day holiday. What stood out today was the breadth. Large caps, DeFi, NFTs, AI, Even real-world asset baskets softened together, while only a handful of names managed to buck the trend. Why GameFi felt it most? When a single token in a tightly linked ecosystem gets hit by a big seller, slippage and cascading liquidations can spill across the whole basket. Add thin order books on a holiday Monday, and you get exaggerated moves. If you're trading that segment, confirm whether the selling was a one-off whale event or the start of a rotation. On days like this, narrative can move faster than fundamentals. There were a few bright spots. A couple of infrastructure and meme plays printed green, despite the tape classic idiosyncratic strength that often points to specific catalysts like listings, airdrop snapshots, or upgrade timelines. If you see something rallying against a weak market, dig for that catalyst before you chase. Strength is great, but without a real driver, it can unwind quickly. What to watch next over the week? Flows into spot ETFs and ETPs. Sustained inflows tend to stabilize dips. Outflows can turn a pullback into a grind. Funding and open interest. If perp funding normalizes and OI rebuilds after a flush, that's a sign dip buyers are stepping back in. Dollar and rates. A firmer dollar often weighs on crypto risk. If DXY cools, relief rallies become easier. Project-level catalysts. Roadmap checkpoints. Testnets, mainnet upgrades, exchange listings can still create winners in a red tape. If you're positioning, here's a simple game plan. 1. Define your invalidation. Decide where you're wrong before you enter, then stick to it. 2. Scale entries. On trend days, staggering buys or sells helps avoid catching the worst candle. 3. Separate trades from investments. Short-term tight stops for trades, long-term spots sized modestly and left to work. 4. Use volume as your truth serum. Breakdowns and breakouts without volume are less trustworthy, especially on holiday liquidity. A quick note on sector rotation. When major sell-off, capital often rotates down the risk curve only after the first bounce. If Bitcoin and Ethereum stabilize, watch for strength to rotate into high beta names a day or two later. If majors keep leaking, lower cap sectors usually amplify the down move, so patience beats knife catching. Bottom line, it's a messy opening print for September, but the structure is familiar: broad risk off, a few outliers holding green, and a market hunting for its next catalyst. Keep your focus on flows, funding, and real catalysts, and let the tape prove strength before you press risk. And for the headline snapshot throughout the day, I'm tracking the live feed from Crypto News. Live Crypto News today for September 1st. You've been watching Cryptozard News. Please subscribe and like, and leave a comment if you enjoyed this video, and let me know what other crypto-related news you'd like to hear in the future. Is XRP really setting up for a run toward $50? According to Typranks, a well-known Bitcoin investor who goes by Pumpius thinks so, and he calls it a controlled launch rather than a hype spike. Here's the core of his argument. Typranks reports that Ripple has applied for a U.S. National Trust Bank charter with the Office of the Controller of the Currency. If that charter is approved, Ripple could plug directly into the banking system and position XRP as a regulated settlement asset inside that framework. There's public evidence this application exists. The OCC's Digital Assets Licensing page lists Ripple National Trust Bank among pending filings, and industry groups have already submitted comment letters supporting or opposing it. Reuters and the Wall Street Journal have also reported on Ripple's bid and the broader push by crypto firms to secure federal charters. Why would a bank charter matter for price? Typranks writes that an OCC charter could give Ripple direct access to core payment rails and custody authority for tokenized assets and stablecoins. In that model, XRP isn't just a speculative token. It becomes the native liquidity tool that bridges value across borders and between asset classes on infrastructure banks actually use. Timing is the next piece. Typranks says the OCC often works on roughly a 4-month review window, which puts a potential decision in the autumn if everything stays on track. That kind of binary catalyst can concentrate attention, especially if it arrives alongside other milestones like progress on exchange-traded products or major corridor wins. Keep in mind that official timelines can shift. Of course, not everyone is cheering this plan. Banking trade groups, including the Independent Community Bankers of America, and others have urged the OCC to slow or block crypto trust bank charters, specifically naming Ripple's application. Their message is that federal charters for crypto firms deserve more public debate and tighter safeguards. That opposition is a reminder that approval is not a rubber stamp. Let's talk numbers so expectations stay grounded. Typranks relays the investors' math that a move to $50 would imply an XRP market value around $3 trillion at recent circulating supply. That would be larger than many blue-chip companies and would rival or exceed today's largest crypto assets. Ambitious targets like that require real adoption, deep liquidity, and time. Treat them as a scenario, not a promise. So what should you watch from here? First, the charter process itself. Look for updates on the OCC docket and responses from regulators or trade groups as the comments cycle evolves. Second, institutional plumbing. If Ripple secures bank-level permissions, watch for signs of direct access to payment systems and clearer pathways for custody and stablecoin operations. Third, real usage. If XRP is going to act as settlement liquidity for banks and brokers, you should see measurable volumes in the corridors Ripple serves. Risk check. A charter could be delayed or denied. Even with approval, integrating new rails into conservative institutions takes time, and market sentiment can swing long before fundamentals show up. Keep allocation sensible, define your invalidation levels, and remember that bold predictions are most useful as research prompts, not trading signals. This framing comes directly from the Typranks analysis of the thesis. Bottom line. According to Typranks, the case for a controlled launch toward $50 rests on regulation first, adoption second, and market structure third. If the charter lands and institutions actually use the rails, XRP's role could evolve from speculation to settlement. If the charter stalls or usage lags, the story takes longer to play out. You've been watching Cryptozard News. Please subscribe and like, and leave a comment if you enjoyed this video, and let me know what other crypto-related news you'd like to hear in the future. Could XRP ETFs get fast-tracked by US regulators? According to Fixed Street, the SEC is weighing an expedited pathway that could shorten the approval clock for spot crypto ETFs, and XRP may qualify if objective listing standards are adopted. So what is this fast-track idea? Fixed Street reports that major exchanges have asked the SEC to adopt generic listing standards for commodity and crypto ETPs. Instead of handling each new crypto ETF through the full 19B gauntlet and months of back and forth, the SEC could approve funds that meet a defined checklist: surveillance sharing, custody, pricing, and disclosure, much like how traditional ETFs are handled. Galaxy Research argues a rules-based framework would clear the backlog and give issuers clarity, while expanding regulated access for investors. Why this matters for XRP? If the SEC adopts generic standards, issuers wouldn't need to reinvent the wheel for each coin. As long as an XRP ETF meets the same market integrity and investor protection criteria, it could move through a streamlined review. Fixed Street frames this as a meaningful boost to XRP's odds because the conversation shifts from should XRP get an ETF at all to does a given filing meet the rulebook. Let's talk timelines and mechanics. Today, crypto ETFs often face up to 240 days of review. Under a generic standard, the exchange's rulebook would pre-authorize listings that meet the criteria, while issuers still file and update their prospectuses. Practically, that can compress timelines and reduce the number of discretionary delays we've seen with previous crypto products. It doesn't guarantee approval, it just swaps case-by-case uncertainty for a clear checklist. What would that checklist likely include? Based on how the SEC handled Bitcoin and Ethereum ETFs, expect robust market surveillance sharing, high-quality pricing sources, cold storage custody with qualified custodians, and detailed risk disclosures on volatility, concentration, and forks. If those pieces are in place, an XRP product can be judged on the same standards, not on bespoke, moving goalposts, price context, and key levels. Fixed Street notes XRP has been holding a key moving average as ETF optimism builds, with traders eyeing a decisive move above the $3 psychological level. The next waypoint many are watching is the cycle high near the mid-3 South. A clean break and hold above that zone would support the bull case if ETF headlines turn positive. Big picture pros and cons. The upside scenario is straightforward. A rules-based path unlocks spot XRP ETFs from multiple issuers, broadens institutional access, and creates steady inflows that don't care about intraday volatility. that can deepen liquidity, tighten spreads, and reduce the tourist-only feel of rallies. The risks are equally clear. The SEC may narrow what qualifies, slow walk implementation, or keep a high bar on surveillance. Even with an ETF, flows can be choppy, and price can sell the news if positioning is crowded. What to watch next? First, the SEC's decision on adopting generic listing standards for crypto ETPs. This is the switch that enables any fast track. Second, new or amended XRP ETF filings from major issuers once the rules are clearer. Third, exchange messaging. When Nasdaq, NYSE Arca, or CBO signaled their rulebooks are live for crypto ETPs, the clock effectively starts. Finally, watch the tape. Sustained spot demand, healthier order books, and elevated but orderly volume are the fingerprints of ETF-driven participation. Bottom line, according to Fix Street, the fastest route to an XRP ETF isn't a one-off exception, it's a standardized rulebook that treats crypto ETPs like other commodity funds. If that framework lands and issuers meet the checklist, XRP has a credible path to approval and a stronger case for institutional adoption. If the framework stalls or gets watered down, timelines extend, and the market keeps trading headlines. You've been watching Cryptozard News. Please subscribe and like, and leave a comment if you enjoyed this video, and let me know what other crypto-related news you'd like to hear in the future. XRP might be setting up for its next big leg higher, and the chart plus the ETF calendar are pointing to the same window. According to Cointelegraph's report by Nancy Lou Bale published today, XRP is tracing a classic bull flag on the daily chart. In plain English, price ripped higher, then cooled inside a tight, downward sloping channel. That cooling phase often resolves with an upside break if buyers reclaim control. Here are the levels that matter. Cointelegraph notes the upper flag trend line sits around the $3 area, with the 50-day simple moving average near 3.08 acting as the first ceiling. Above that, there's horizontal resistance around 3.40 and the cycle high at 3.66 printed on the 18th of July. A decisive daily close above the flag, and those moving average hurdles would confirm the breakout and activate a measured move toward $5. Why $5? In a bull flag, technicians often project the height of the prior rally onto the breakout point. Cointelegraph's analysis uses that logic to map a target near 5, which would be roughly a 70 to 80% move from the recent consolidation zone if momentum follows through. The second driver is the ETF clock. According to Cointelegraph, US spot XRP ETF filings face key SEC deadlines between the 18th and the 25th of October 2025, with Franklin Templeton's decision date on the 14th of November 2025. Betting markets on Polymarket have pushed the odds of an approval by year-end up to the high 80s. A rules-based greenlight would open the door for steady, programmatic demand from traditional investors who cannot or will not hold spot crypto directly. Let's connect the dots. A technical compression into visible resistance, plus a catalyst window where ETF headlines can flip flows, is the kind of alignment that fuels fast moves. If buyers can reclaim 3, punch through 3.08 with volume, and absorb supply at 3.40 on the way to 3.66, the path toward the $5 projection opens up. Now the risk side. Flags can fail. If XRP loses momentum and closes back below rising short-term supports, or if the SEC slows or denies early ETF bids, the setup can stall. Watch for heavy rejections at 3.08 or 3.40 on rising sell volume. That's the tell that supply is still in charge. A clean break back below the lower flag boundary would argue for more base building before another attempt. How to track quality in real time. First, volume confirmation on any breakout attempt. Thin pushes are easy to fade. Second, open interest behavior on derivatives. Healthy increases alongside rising spot volume suggest trend strength rather than a squeeze. Third, order book depth around $3 and 3.08. Shrinking offers and sticky bids are your microsignals that resistance is weakening. What to watch on the ETF side? Monitor issuer amendments and exchange rulebook updates in the run-up to the October window. If multiple issuers update custody, surveillance sharing, and pricing language in sync, it usually means the dialogue with the SEC is progressing. If odds rise further and spreads tighten on XRP pairs, the market is pre-positioning. Bottom line. According to Cointelegraph, XRP's daily chart is printing a textbook bull flag into a catalyst-heavy autumn. Reclaim 3, clear 3.08 and 3.40 with real participation, and a run at 3.66 and the $5 measured target is on the table. Lose those levels or see the ETF timeline slip, and the pattern likely needs more time. You've been watching Cryptozard News. Please subscribe and like, and leave a comment if you enjoyed this video, and let me know what other crypto-related news you'd like to hear in the future. Fly Emirates, pay in crypto. That's the vision taking shape right now. According to Invests, Emirates signed an agreement in July 2025 to bring Crypto.com Pay into its checkout. With support for more than 30 cryptocurrencies including Bitcoin, Ethereum, XRP, Kronos, USDT, and USDC, and a full rollout targeted for 2026. The idea is simple: give travelers a fast, global way to pay that doesn't rely on traditional card rails. Emirates itself confirmed the direction. According to the airline's official media center, the company signed a memorandum of understanding with Crypto.com on July 9, 2025 to explore integrating Crypto.com Pay into its systems. The integration is planned to begin next year following technical and compliance work, making Emirates one of the first major global carriers to add native crypto payments. Industry coverage fills in the timeline. According to CoinDesk and Cointelegraph, the initial phase is expected to start late this year, with a progressive rollout across routes once testing and customer experience mapping are complete. And according to Reuters, the move aligns with Dubai's broader strategy. The UAE has become a regional hub for digital assets, with a growing list of services from real estate to education already accepting crypto. So where does XRP fit in? Crypto.com Pay already supports XRP, and that matters for an airline checkout. XRP's draw is speed and low fees, which can be useful for cross-border purchases and last-minute bookings where card declines or FX frictions can ruin a trip. Stablecoins like USDC and USDT can handle price stability, but XRP can shine on fast settlement, routing flexibility, and broad exchange liquidity. A mixed basket at checkout: BTC, ETH, XRP, CRO, plus stablecoins gives customers choice while the airline manages treasury and fiat conversion on the back end. What might the customer journey look like? Based on Cointelegraph step-by-step guides for booking flights with crypto, you'd choose your fare as usual. Select Crypto.com Pay at checkout, pick your preferred coin, say XRP, scan a QR code, and complete the payment. Confirmation lands in seconds, and the merchant receives either crypto or instant fiat settlement, depending on their settings. For refunds and cancellations, the system typically mirrors the fare rules, with the refund rooted in the same asset or in fiat according to the airline's policy. Why this could matter for adoption? Airlines operate globally, process millions of transactions, and deal with FX costs, fraud risk, and card chargebacks. A crypto checkout option can reduce certain costs, broaden reach to unbanked or underbanked customers, and offer loyalty tie-ins. Imagine promotional fares or rewards that include CRO perks or limited-time discounts for paying in XRP. If Emirates executes well, competitors usually follow. There are risks and realities to keep in mind. Timeline slippage is common for new payments rails, especially with multiple regulators and regions involved. Volatility is real. Stablecoin routing can soften that, but accounting and treasury management still need to be airtight. Refund flows and chargeback analogs must be clear so customer support doesn't get overwhelmed. And not every region may see crypto checkout on day one. Rollouts often start with pilot markets before going wide. What to watch next? First, official launch details from Emirates, which routes, which currencies at checkout, and whether prices will be quoted dynamically in both fiat and crypto. Second, any loyalty integration. If Crypto.com and Emirates tie checkout to rewards, adoption can accelerate. Third, user metrics in the first quarter post-launch, conversion rates, failed payment rates versus cards, and customer service feedback. Finally, look for other carriers in the GCC or Europe to announce similar integrations. Travel is a fast copycat sector when something works. Bottom line, according to Invests, Emirates is moving from exploration to execution with Crypto.com Pay, with XRP listed among the supported assets and a full deployment targeted for 2026. With confirmation from the airline's own media center and consistent reporting from CoinDesk, Cointelegraph, and Reuters, this isn't just a headline, it's a real test of crypto at global scale. If the rollout is smooth and the incentives are smart, paying for your next Emirates flight in XRP could feel as normal as using a card. You've been watching Cryptozard News. Please subscribe and like, and leave a comment if you enjoyed this video, and let me know what other crypto-related news you'd like to hear in the future.